What's up, everybody? Welcome back to another episode of VAR, man. Video Assistant Referee. This is a series that I've had for a long time on social media for short form content. Before we hop right in, if you're meeting me for the first time, man, my name is Ronnie Fogan. I am a CPA helping creators in Canada and in the United States build wealth through effective tax planning. Now, without further ado, let's hop right in. Day 1 out of 29, the 30% rule: never owe the CRA again. Yo, he might be onto something. I feel like with that kind of title, the VAR ruling could go heavy in either way. It could be a heavy rejection, or it could be a heavy, like, okay, it's a stamp, like this is correct.
First series starts today. If you're a Canadian freelancer, every day in June, I'm going to give you a tax strategy so that you can.
That's a cool series. I like that.
Optimize your business, pay less taxes, and keep more money. Today's tax strategy is very simple. If you don't have a savings account, I want you to go get one. Just call your banker and get them to create you a savings account. And what I want you to do every day, all the profits that come in your main checking account, transfer 30% to your savings account. This is going to pay for all your taxes. I
want to make sure I understand this correctly. Never owe the CRA again. We're going to create a savings account and put aside 30% to pay taxes. There's another 30 seconds. Let's keep going before we assess.
You have to pay for your sales tax and your year-end taxes.
That's true.
If you don't, at the end of the year, you're going to be in a cash crunch. And now CRA interest rates are a lot higher than they were before. So keep more money in your pocket, pay less to CRA, and comment savings below if you're going to go create.
Oh, that's the strategy. The strategy for never owing a CRA again is to put money aside in a savings account to spend at the end of the year so that you don't have to owe. I guess, yeah, okay, so that makes sense. He's saying not owe in terms of not having the cash to pay them. Okay. I'm picking up what he's saying. I'm picking up what he's saying. So pretty much, if we're going from that route, because it came off, the hook suggested it was going to be like a tax-free tax strategy, like never owe the CRA again. But I think he's coming from the perspective of cash flow. So like you never have to be in a position where you're owing the CRA and having to pay high interest fees. So I got you, brother. And on that note, I would say that like it's the right idea. I wouldn't say 30% though. And I'm going to break it down for Canadian creators and for US creators afterwards. If you're a Canadian creator and you're earning income, high income where you actually have to start worrying about taxes, chances are you have the deferring tax strategy in place where you have a corporation structure. You pay yourself a certain salary, but you leave the excess within your corporation, so it's taxed at a lower rate. And at that point, putting aside 30% is robbing yourself of cash flow and income that you can put into other investments and just making the business run, right? Because if we're looking at a corporation, if you're earning for your first $500,000, you're not going to pay more than 12%. So it wouldn't make sense to put aside more than 12% to pay your taxes at the end of the year. You would carve out 12% of the revenue that you get, put it in that income tax account, and every quarter you would pay installments. In my opinion, you only have to put aside about 18% less of what the gentleman is suggesting. Now, if he's saying 30% includes sales tax as well, say for example, if we take a Toronto example, sales tax is about 13%, then it would make sense to put aside around 25%, right? So let's make that distinction again, where it's like, if we're doing just income tax, that would be about 12. If we're doing sales tax, it would be around 13. But even then, to go even further, I would say put aside a more accurate number, put aside a more accurate percentage if you know your margins. If you know that your business keeps about 50% profit margins, I wouldn't put aside 12%, I'd put aside 6%, because I know that my tax owing is based on my net income, not my revenue. So I would look more at my margins. If I know that my business earns 50% margins and my income tax is going to be 12%, then I would put aside 6% of that revenue, right? So you have to be a lot smarter, a lot more diligent. And that does go a long way depending on how much income you're earning, because it gives you more cash flow. Now it's going towards bonuses for your employees to boost their morale. Now that excess 6% can be paid to yourself as a bonus, so you can go on that vacation and take your girl on that date. Naturally, on the US side, we would apply the same logic. If we're going off of C corporations for US creators, I would put aside 21%, not necessarily 30%, to cover the income tax from the corporation. Someone may naturally say, well, Ronnie, aren't you forgetting about personal taxes? Well, no, if you're in a corporation and you have the right structure set at the beginning, which is CPA, you're usually paying yourself a combination of salaries and dividends. At that point, the wages already have the income tax withheld. So the only type of cash flow planning you have to do, if we stay in the context of this gentleman's video, is to worry about the corporate tax. I strongly believe that putting aside 30% is going to be detrimental to your cash flow and the opportunity cost that you can have that extra 18% or that extra 6% reinvested into the business. Overall, this video wasn't too bad. I don't think he was egregiously wrong in anything. I would say the misleading part was, maybe the never owe the CRA again thing. I ended up understanding it just by giving him the benefit of the doubt at the end of the video. But I could see how a lot of people could pick that up and say, like, dude, like, that's a lie. Like, we still have to owe the CRA. In fact, you're telling us to owe 30% when we should really be owing about 12%. So, yeah, I'll VAR verdict in this one. A slight yellow card, I guess. And but yeah, that's pretty much it. For more real and knowledgeable tax advice, make sure you follow, like, subscribe, all that good stuff. My name is Ronnie, and I will see you guys in the next video.